Good afternoon, welcome to GrainTV. It's October 6, 2014. I'm Logan Burgess. From our right here is Cody Bills to discuss a mixed day for the grains in Chicago. Take a look at the iPad here, see where we closed out the day. Corn relatively unchanged during the session. We had soybeans up 8 3/4. Chicago wheat moving lower, down 4 1/4, continuing to be weighed on there by a very strong dollar index. Let's talk about export sales though, Cody. That really seemed like the big mover for beans.
Absolutely. Export sales came out. Let's take a look at the numbers here. For soybeans, we had 1.6 million metric tons sold. Analysts were expecting between 900 and 1.1 million metric tons. Bottom line here, soybeans again beats analysts' expectations, surprising with price action to the upside to support it. We were up 24% week over week in terms of export sales. This was very positive here for soybeans, really showing that demand continues to be strong for that particular grain. When you look at corn and you look at wheat, both of them came in below analysts' expectations, very disappointing. Corn came in only at 478,000 metric tons. That was below the analysts' expectations, between 600 and 800,000 metric tons. Wheat actually also came in below analyst expectations here, only booking 265,000 metric tons. Now, I think wheat also was pressured by the high U.S. dollar, or the increase in the U.S. dollar index, like what you just mentioned here. That was up 0.6% here today. That's being pressured a little bit by European central bank monetary policy, the fact that they could potentially go out and do some more stimulus here. The fact that that door is open, and some of the rhetoric that they used, it really adds strength to the U.S. dollar, makes some weakness in the euro. We're seeing that affecting the grain markets in particular.
And that rhetoric from the European Central Bank, all the more important right now, especially considering last week's announcement by our U.S. Federal Reserve to end the quantitative easing program that's been working to devalue our currency here for really the last 6 years. You know, right now is an important time for corn and soybean producers to kind of take a big picture look at prices. We know there's still a lot to be done here in terms of corn and soybean harvest, but do keep in mind, now that we're out of the month of October, we have the insurance price set for both corn and soybeans. So any producers out there right now that had revenue protection programs are subject to quite a bit more price risk than they have been since these crops got planted. For that reason, I think that right now is a good time to at least take a look at making some cash sales, maybe get a call on top of this soybean market if you're still bullish this thing. But as I look at prices right now, it's been a good run here. We're unable to get above the 100-day moving average here for soybeans. Tested it 5 out of the last 7 trade sessions. So with that in mind, and with the fact that generally when we have ending stocks like the USDA are projecting here for this year, we don't see $10 on the board. I would be looking at making some sales. We do have a very big USDA report coming up next Monday, though, that should give these markets a little bit of direction.
Absolutely. And when you look at this market, I think one of the things that you need to take away from it is the fact that we have had a very sharp correction here after the printing the lows. You know, I don't necessarily think we can continue this sort of trajectory. So with that being said, and producers out there, you know, if you're undersold right now, this could be a very dangerous situation where we saw a rally all through October, raising your average crop insurance price for the month or your average price for the November contract in the month of October. The situation here is just a risky one. So you got to be paying attention to the fact that we could start moving sideways. We could potentially even cup over and retest lows. It's very rare that we see a V-shaped bottom. So keep that in mind, folks. Really run some stress tests. See if a scenario where we start to cup over would be an unprofitable one, because if that's the case, you might want to look at pricing some grain, like Logan said, and then using maybe some option strategies if you still want some exposure to the upside. Other than that, guys, thanks a lot for tuning in. If you have any questions about what we talked about, give us a call. The number is 877-472-4607. And remember, you can take a 14-day free trial at grainhedge.com. See the tools that we use here in the office to monitor the markets live, and also to monitor them on our mobile phones. So thanks a lot for tuning in. We'll see you here Friday for the weekly wrap-up.